G'day traders, Stacey Burke from Stacey Burke Trading. Today I'm going to go over my worst and best trades for the week. Quite a good week in terms of volatility in the markets. It was the inauguration yesterday of President-elect Donald Trump becoming president. So there was a possibility of some volatility last night and building throughout the week as the Trump effect was widely speculated that we might see that peter out and see a bit of volatility in the US dollar cross pairs and also into the markets. But I'm just going to go over, I had two really great trades on the peso and one that was a disaster just from a preparation and an execution standpoint. But just again going over basic setups. I talked about opening range in one of my last videos. The first day of the week, the red bars on this chart represent the Mondays. And as we can clearly see, the inventory was consistently moving up over the last 2-3 weeks after a huge effect when Trump was first initially elected in the election. We saw the market sort of go sideways. We had the opening range of the month. And largely we saw that form a horizontal channel or rectangle, and then it broke out a few weeks ago. So we saw that breakout formed an inside bar on last Monday's opening range, and this Monday we saw the another inside bar. But the previous week, as we always do, the questions I ask are, when the market opens on Monday, is the market, where is it opening in relation to the previous week's trading range? So it was above the previous week's opening range, but it was inside of the range for the week, and it was in the value area. Now it also had broken out last Thursday, trapped short traders in, and then Friday had a out of balance bearish selling day. Could have had long covers, profit taking, short sellers entering the market, hard to say. But on the Monday, I saw this as a great opportunity to take a short trade at the close of the market into the open and position my stop above last Wednesday's high. So if we go to the 1 hour chart, I'll just explain how I took that trade. And as we can see here, the market had been making higher highs throughout the London and the US sessions, but as the market closed, we saw this last hour give us a bit of a potential topping pattern. But more importantly for me, it gave me an opportunity to also identify another area of selling. So if we just condense this a bit, we can see where the market had been selling off the last week, and definitely an area of selling. So I had an opportunity to enter in short at the open on Tuesday morning, and as we see, that market took off very quickly. And instead of using the end of day high from the previous week on the Wednesday, I used the Friday high as my stop. So it just gave me an opportunity to narrow my risk, but also, it's one of those situations where, based on my thesis of the trade, I was looking for the market to reject that quickly. And again, just going back to the opening range on the 1 hour chart, you can see that even in this instance, the market in the opening range and then the initial balance indicated selling, and it gave traders an opportunity for a few hours to take a short trade somewhere still inside of that opening range with a relatively low risk short entry. Anyways, I took that trade. I had my target set for the low of Monday. That trade yielded over 200 pips, and I was happy about that, because as we saw, the market then progressed to go into a trading range, which leads me to my next trade. So on Tuesday, we saw the bearish selling off, and again, I thought the inventory at that point was down. As you can see, it was selling off. I thought we were back inside of the range of the selling. I thought we were gonna at least retest the lows somewhere down around that 21,200 area. So as we get into the Wednesday session, now I just want to explain as well, I've been talking about purely trying to stick to the end of day trading. these setups on the hourly chart on the peso have been very clean this last week, and I just couldn't resist trading them. Now, this leads me to my next trade, which on Wednesday I shorted the market at the high of the Tuesday closing bars in the US session. I shorted that and immediately took a beating on that, as you can see. My stop was above the high of Tuesday, and the reason why that was is that, again, I was positioning myself with a bit of a larger stop. My risk was still controlled, but it was under the guise that this was going to yield at least a 2-to-1 risk reward if it took out the lows down below. So needless to say, as we can see, I did get pumped on this trade. That was a painful trade because in retrospect, when I looked at this trade in hindsight, as you can see, this was not a classic short squeeze, but pretty close to the as close as you can get to a short squeeze. So we had this selling off, 20 period closing low reversed, but then again it sold off and sold off hard into Wednesday's open. Didn't quite have a lower close, but close enough. It's the same thing as a short squeeze. Immediately reversed in the opening range again. So again, there's our opening range, first two bars. Broke out. The questions I ask again are, which way is the market trying to go, and how good of a job is it doing trying to do that? So the market obviously did an open test rejection. Again, one of the 4 types of market opens. If you haven't done so, read Dalton's book, Market Profile. Market broke out, weak pullback, broke out again into the close of Asia, and again in London Open exploded out. Now, if you know much about these short squeezes, you know that when they move, they will move hard and fast, and I'll show you a couple examples on different time frames. And again, this did exactly that. So I failed to pick up on that. That could have been a very lucrative trade, but again, lessons learned. My preparation, my management, all those things I think were pretty spot on, but just obviously did not have a full perspective on the opportunity that presented and actually counter-trended against that breakout. So again, there's always room for improvement, which leads me to the next trade. So again, you take these trades, you get beat up, but you get back on the saddle because that's the fastest way to, if you make mistakes or if you have a losing trade, it's the cost of doing business. It's just another trade, but you have to get back in the saddle and execute right away again, sticking to your plan, sticking to the A-trade setups. So again, we have our bracket high. Now we've got our bracket low from Monday, Tuesday. Thursday, we see this doji set up, a little cross-haired bar. So Friday, going into the Friday session, as I looked at the hourly chart, of course I take the most recent high, and also if you notice this right here, okay, if you've looked at my other videos, I talk about the high of the low period and the low of the high period, John Carter. So this is a classic low of the high period trade. And when I saw this there, I thought, okay, we've got our most recent high, we've got a most recent low rectangle forming. Now, what was important about yesterday is I was definitely keen to watch this into the US session, how this was setting up, because the Trump inauguration, there's been some significant events this year. Brexit, we had obviously the Trump election, and then the Italian vote for the referendum, and there's been a couple of others, but these are major one-off sort of opportunities that in retrospect have really looked quite simple. But what's important to know about these is that there's potential for a large amount of movement, and one thing that I think is really paramount that you have to understand is that the market will factor in the obvious. And what that means is that if you look back at the Trump election, if you look back at Brexit, they created very similar patterns to this right here. They factor in the obvious. People look at this as a bullish market. They see the inventory is up. They see a rectangle. They're looking for a continuation. They're looking for, the Trump effect's been very positive. They're looking for that positiveness to continue. And so what I was looking at, though, was I was looking at the low of the high period, and I'm looking for an area where I can potentially now sell high. We've got a weekly bracket that's set up with our opening range. We've got a market that went out of balance on on Wednesday. It consolidated on Friday. And so now we've got a market that's searching for value. We had the short squeeze on Wednesday. We've had a breakout come out of this range. So again, you're looking for asymmetrical risk reward opportunities. So if we have our rectangle, we can project a range now, and we're looking at least 2 times our risk. So when this started setting up, we headed into the US Open. It came back inside of this range. I shorted this market immediately. And sometimes you have to have done this several times or looked at this several times, and eventually you understand that you're comfortable taking on that risk at the right times. This was the US Open. Again, I talk about Asia Close, London Open, and the New York Open and the London Close. And with the peso specifically, it has the potential to move 2, 5, 1,000 pips sometimes in a day or two. So we looked at, I looked at this, I saw the opportunity, I saw potential head and shoulders effect, but I did see the rectangle, I saw the false break high, I saw the low of the high period set up. All the cards were there for me to take this trade. I shorted this market. Within 2 hours, the market had already broken out of the rectangle, and that's exactly what my hypothesis said that it should do if it was going to be a fast break trade. It gave the small false break and it reversed immediately. We talk about the 3 types of markets. There's 3 types of scenarios. A market is always trying to break out, and it will either it'll break out, consolidate, and resume that trend. It will break out, consolidate, and go into a range-bound market. It will break out and reverse and run to the other side of the bracket. Markets are only ever trying to do one thing, and that's find value. So this market did exactly that. When it broke out of the bottom of the rectangle, I was able to go to break even. I went to bed. I had one trade, one position that was exiting at 2x of that range, which gave me just over 200 pips. And then, of course, I had 2 other positions, and I exited one. I got up this morning before the close and exited around 565, 21,565. And then I've left a trailer in there to sit and see. I still think that we'll see this market take out the lows down here on this daily. This could still potentially run, but I do think we'll see some kind of retest, bullish retest first before we may see this market start to fall over. Now that's just obviously a speculation at this point, but I would be looking to see the market again trade and see. We might see this market continue to try and again retest those highs. Very rarely do you see a market end on that double top sort of pattern. Most double tops do not end a bull market. So hopefully you got some value out of that today, traders. If you again, sometimes these hourly charts, I go from the top down effect. I like to look at the dailies, but again, looking for these simple setups, looking for these low of the high periods, high of the low periods. And again, even without knowing anything about a short squeeze, you could have found the low of the high of the low period and done quite well in that trade. So a little mistake on my part there. Fortunately, it didn't cost me too much, but it was enough of a kick in the pants. But immediately I was able to regroup for Friday and obviously wipe that whole loss out and make a nice profit on that as well. So again, just talking about the short squeeze, there's a great example on the peso of that, and you can see this here. Back when we had the Trump election vote, classic short squeeze. Market sold off into a 20-period closing low right off the bat of the opening range of the month, an open auction. Savvy traders position themselves 1 pip above the breakout candle of the low close. Aggressive traders may have looked to enter somewhere underneath if they were trading intraday trading that market. But a classic short squeeze, another example of how that market will explode. And again, just opportunities constantly showing up in the markets. So study the opening ranges. Look at these high of the low periods, low of the high periods. Look at your ranges. You know, even if we talk about marking off your highs and lows for the sessions, again, just critical. Look for these markets to break out. Look for breakouts to fail. Look for breakouts to come back into range and be able to position yourself with, especially if you're on the hourly chart, there's never any more than one bar. You should never be against the trend. You should never have more probably than one bar stop on these markets unless you're trading them on a longer time frame. But if you're trading these markets on an hourly chart, even if you're trading on a shorter time frame, these hourly charts can be a great reference for traders to position their stops. So hopefully you got some value. Great learning lessons for me. Again, just comes back to preparation, your analysis, and your ability to execute, staying focused, not getting complacent. So you have to have the confidence to execute your system, but don't get complacent. Stay focused, stay disciplined, traders. Good luck next week, and have a great trading session. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.